Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Stuart Popejoy, co-founder and CEO of Kadena, to discuss the three signals that show crypto interest is heating up in the mainstream. Stuart, it's great to have you with us, and I want to talk about the three areas separately because they're really interesting. The first one being talent migration into crypto.
Yeah, absolutely. It's something that originally in crypto you really had like cryptographers and a fairly kind of specialized bunch getting involved, but with basically with the huge growth in kind of assets under management and what's happening in crypto, you're actually starting to see some really big people coming over from traditional tech and fintech. So, for instance, like Charisse Torres, she's the chief marketing officer at Facebook. She came over to Novi. You have Amazon cloud exec Pravit Tiwana coming over to Gemini. So you have these are big players coming over, and it's something you haven't seen before. It's happening all over crypto.
Right, and of course, the second one is with that institutional funding moving into crypto projects.
Right, exactly. Like you have a traditional VC kind of dropping, and you have a lot more, or kind of flatlining, and you have a lot more money coming into crypto. Crypto as a whole raised like 25 billion just last year. You have crypto startups; they received more than 3.5 billion in VC cash. This is in infrastructure, NFT, and gaming. And yeah, so I mean, the amount of money coming into the space and like making new projects happen is incredible.
Right, and of course, the third signal following on that is the increasing penetration of crypto assets.
Sure, yeah. For instance, you now have like Fidelity 401ks that'll start, where you can start getting into Bitcoin and things like that. And that's just beginning, and you're only going to see more of that. I mean, right now it's really the kind of blue chip crypto assets like Bitcoin and Ethereum, but eventually you're going to see that broaden out to DeFi and all the other assets that are out there, and even NFTs.
Do you think the story is fully told at this point, or we're still early?
Crypto people love to say we're still early, and I think that's true and that's not true. I mean, crypto's been around since for a long time now, over a decade. For tech, that's actually not that young. However, I think that it was so much in the domain of enthusiasts and experimenters for so long that it's really in the last like 2 or 3 years that you started to see the explosive growth. And originally that was in DeFi. DeFi, which is kind of, decentralized trading. It's something that really allows kind of regular people to get involved in every aspect of trading and issuing assets. And then, of course, NFTs. NFTs have completely taken off and blown up, and that's a huge market now. The overall size of the crypto market is so much bigger. It's it passed into the trillions not that long ago. However, I think the way that it is still early is that there's still a gap with mainstream users. It's still, I think, intimidating to get into, especially DeFi, less so with NFTs. But I think, people thinking about it really from an economic point of view or as an asset allocation point of view, I think it's still very new. It's certainly extremely new for the average, retail investor. But I think the big signal there, though, is that this is actually good news for somebody looking to get involved in it, because now is really the time with the talent coming in and with new ways to get to the assets and the asset pool kind of expanding. This is an incredible time to be coming into crypto.
Yeah, and Stuart, what's interesting is with all the institutional adoption and money going into the space, we've seen it correlate more to what traditional asset classes are doing, right? And there's been a lot of volatility in the crypto space, just like we're seeing in the market overall. With that said, do you still think that it could be a good time to enter the market for someone who is just gaining experience with this?
I mean, the volatility is there, so I think it's definitely one of these things that you want to think about it from an asset allocation point of view. I think you're missing out on upside if you don't start looking into it. And and of course you want to start with Bitcoin, Ethereum, some of these better known. And yes, they're volatile, but I think they're not completely decorrelated, but I think they would be a very good part of a basket of investments alongside other things. So I think it's definitely time to start getting your feet wet and start seeing what it's all about.
And finally, tell us where Kadena fits in the crypto ecosystem and a bit about your background.
Yeah, so Kadena, that's the company I founded with my co-founder, Will Martino, in 2016. We came out of JP Morgan. We were doing research for blockchain projects there. We call ourselves the blockchain for builders, the people who are building the next generation of the internet. We had Web 2, now we're moving to Web 3. Our big distinction is that it's a very safe and scalable blockchain. One of the big problems you see with blockchain right now is that as things get more popular, like Ethereum slows down and it starts costing a lot of money just to do a transaction. We take that same technology with all the same safety that you have in like Bitcoin and Ethereum and make it scalable. So that actually makes it more accessible, not just to builders, but to the, to the new users that we really want to attract. And this is something critical for mainstream adoption. Our mission is to make blockchain accessible to everyone.
Oh, I'm sorry, go ahead.
Oh, yeah, sorry. I was just going to say about me. My background is I've been in technology since the 90s. I did a lot of work in equity trading and exchange technology before coming into blockchain around 2014. It was great to be at JPM when they were at JP Morgan, right when they were first starting this research. I got to talk to Vitalik and some of these like superstars of crypto. Vitalik's the head of Ethereum while we were there. And that's directly what Kadena came out of, was like, JP Morgan wanted to see how this could make sense to like traditional business, and we wanted to bring it to everybody.
Great, and that was actually leading up to my question. It's interesting to see how a lot of people in traditional finance have moved over to the DeFi side, and it no longer seems to be an us versus them story, but really marrying the scalability of what we see on the traditional finance side with the speed and the transparency that DeFi offers. And I think it's encouraging to see that certainly over the past 2 to 3 years, where it's more of a marriage of the two versus competing against each other, if you will.
Absolutely, I think. I especially because there's some interesting things happening in NFTs, where NFTs are starting to be used for not just like collectibles and games, but they're actually being used for things like real estate, for anti-counterfeiting is a really exciting project on Kadena called DNA doing that. And but the point is that now the diversity of asset classes and just the sheer size of the market, I mean, that's ultimately what traders are going to pay attention to, right? It's like now there's enough to actually really, for the big boys to come in and start playing around with this stuff, big boys and girls. But also, I think that the technology has matured. That's I think people are seeing what at least what needs to be done and what the next steps are, and that's certainly what gets us excited. And of course, my background is the same, right? But I was one of the few back in 2016, but now there's a lot of us.
Yeah, all right. Well, certainly encouraging for the industry. Stuart, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.